in order to keep the system going, they can't let money supply decline. But they've let money supply decline, which tells me the plan is to tank the entire credit system. And that's how you will own nothing. The you'll be happy part, I don't know what they're going to put in the water or the air, but that's how you'll own nothing when credit collapses.
You're watching Silver News Daily. Like this video and subscribe to the channel for the best news that you don't want to miss. Now let's get straight to it.
Imagine waking up to a world where your hard-earned dollars are fading away, losing their value with every tick of the clock. It's a scenario that's becoming all too real as the cracks in the foundation of our financial system grow larger. But amidst this looming chaos, there's a glimmer of hope, a shining path forward for those savvy enough to see it. Yes, I'm talking about silver, not just any silver, but an investment that could soar to an unprecedented $2,800 per ounce. Why silver, you might ask? And why now? Stick around as we uncover the seismic shifts underway, pointing us toward a future where smart silver stackers aren't just surviving, they're thriving beyond measure. Before we get going, let's take a look at how the government's best and brightest are solving the nation's debt problem. Subscribe to stay up to date on their groundbreaking work.
Primarily, not in every transaction. And, that's a possibility. I mean, does it, mean much? Maybe yes, maybe no. I want to say one more thing. I had an update from my paid members, and a guy wrote me about, why he thought the silver stock should be much higher in price. And I made a video. I usually answer questions that are really pertinent to the entire membership by video, so everybody has the benefit of the question. And I showed that in that video that some of the proponents that, the stocks don't do as well as the metal itself. On aggregate, that's true. If you bunch them all together and average them, that's a true statement. But it's false if you know what you're doing. So, for example, my favorite gold company was $30 when gold was at 2,000 12 years ago. Now that stock's at 100. So it's up 300-something%, and gold is the same price. So if you put your 10,000 gold in the year 2011 September, it's worth 2,000 now. But if you put it into my top pick for a gold company, it'd be worth 6,000. And then I looked at my favorite silver pick, and it did about the same. It doubled. And that is really remarkable when you think of this silver company that's doubled from the time that silver was at $50, because we're less than half of that now, and yet the price has doubled. So if you bought silver at the top of the market at 50, right now you've lost 50%. But if you bought that stock at the top of the market, right now that $1,000 investments were 2,000. So if you know what you're doing, picking, the miners or the resource sector, you can beat the market. And I just want to make that clear. I mean, I know I'm kind of touting my own word, but it's the truth, and it works. And that's why I think you should have a balance between physical metal and the equity side if you know what you're doing. And those numbers are facts. They're not made up. They're not wishful thinking. The problem is it's almost too simple. And once people learn that from me, say, oh, it can't be that easy. So they're always looking for that mother lode, right? That little stock that's 12 cents, it's going to go to $120, and they're going to buy their own island, and that happens. But not.
In the heart of our financial system lies a hidden truth, one that's been obscured by the seemingly infinite power of the dollar. This truth, the inherent fragility of fiat money, currency that derives its value not from physical commodities, but from governmental decree. For years, we've watched the dollar's buying power erode, nibbled away by the relentless forces of inflation and debt accumulation. As governments print money with abandon, the hard-earned savings of individuals are under silent siege, losing value with each passing day. But it's not just a matter of dwindling purchasing power. It's a symptom of a deeper malaise within our economic framework, signaling a system stretched dangerously thin. The question then arises, how do we protect ourselves from this invisible erosion? The answer lies in the tangible value of precious metals, a beacon of stability in a sea of paper promises. As we peel back the layers of the fiat fallacy, we've uncovered the compelling case for silver, not just as a metal, but as a crucial investment in an era of uncertainty. The journey from paper to metal isn't just a financial shift. It's a move towards enduring value in a world where trust is increasingly scarce. So let's gear up, dive deeper, and understand why turning to silver now could be the decision that safeguards your financial future against the unpredictable tides of fiat currencies.
Yeah, I think that's the best approach. I mean, that's what I've taught for years, as you know. And you don't have to go hog wild, old expression. I mean, saving, I think most people that learn what's really going on should save in real money. And if you do it on a longer term basis, you'll come out ahead. In other words, if you dollar cost average over the last 20, 23 years from the beginning of this bull market, gold was at 252, now it's at 2,000. Silver is under 5, and now it's at 23. So they're both up. So gold has outperformed silver at this point in time. So I think that's the approach. And then, things get rearranged. It's hard to say what the authorities will do as far as payment goes. I mean, in the 30s, which was a much simpler time and much more agrarian culture where many people grew food and had animal husbandry, much easier to actually survive because of that. But, they bartered, they traded, whatever. So we have that opportunity again. I really think that it's not a sure thing. I mean, even though I just, made a brief textual look at the book of Revelations, we don't know the timing and we don't know exactly how it's implemented. And what we don't really get from that is what does the alternative look like? We know there's people that won't do it. And so what does that look like? You just have to use your imagination. My friend Franklin Sanders, who's written a few books and does a newsletter, and he also is a precious metals dealer. Probably shouldn't say that. Sorry, Andy. But he wrote a book called Highland, and it's a fictional book, but it's really pretty accurate as far as what it would probably look like.
In the vast expanse of investment options, precious metals stand out not just for their luster, but for their enduring value and stability in times of economic uncertainty. Today, we embark on a journey to unravel the mystery of these ancient stores of wealth with a special focus on silver, a metal that has captivated mankind for millennia. But why do precious metals, and silver in particular, hold such allure for investors? And how do they serve as a bulwark against the volatility that plagues our modern financial systems? The answer lies in their intrinsic value. Unlike fiat currencies, which are subject to the whims of government policies and economic cycles, precious metals derive their value from their scarcity, physical properties, and historical significance as mediums of exchange and units of value. Silver, with its dual role as both an investment asset and an industrial commodity, offers a unique proposition. It's not just about wealth preservation, it's about potential growth. As industries from technology to healthcare rely increasingly on silver for its conductive, reflective, and antimicrobial properties, demand grows, even as supplies tighten. This dynamic sets the stage for value appreciation over time, separate from the fluctuations of stock markets and the erosion of currency values. But let's dive deeper into what makes silver a particularly compelling choice for investors seeking refuge and opportunity in precious metals. The advent of precious metal IRAs has opened new avenues for individuals to incorporate silver into their retirement planning. This isn't about stashing silver coins in a vault. It's about leveraging the tax advantages and growth potential of IRA structures to build wealth over the long term. Imagine diversifying your retirement portfolio not just across stocks and bonds, but including tangible assets that have withstood the test of time. This isn't a new concept, but a return to the age-old wisdom that recognizes the value of holding physical wealth. Furthermore, as we navigate the complexities of the modern economic landscape, it becomes clear that adding precious metals to your investment mix isn't just a conservative move, it's a strategic one. It's about positioning yourself to benefit from global economic trends, including the push towards renewable energies and advanced technologies, all of which underscore silver's critical role. The beauty of investing in silver lies not just in its potential for appreciation, but in its capacity to offer peace of mind. In a world where the next financial crisis could be just around the corner, holding silver is akin to having a financial lifeboat, ready to weather any storm. So as we peel back the layers of market dynamics and look beyond the surface of traditional investment wisdom, the case for silver becomes increasingly compelling. It's not merely an alternative. For many, it's becoming the cornerstone of a well-rounded, resilient investment strategy. As we continue on this journey, keep in mind that the shift towards precious metals, and silver in particular, is more than a hedge against inflation or economic downturns. It's a proactive step towards securing a future where your wealth is not just preserved, but has the potential to grow.
Certainly is. I just interviewed David Rogers Webb. He said his wife thought it was one of the better interviews. I got some compliments on it. Thank you, everyone. I used to always take them, but that was back in the good old days. I mean, basically, it was a lot simpler system, and you could get the certificate. And some of them were actually beautiful pieces of art. I mean, they're, you've probably seen them, but some of them are really cool to look at. I tell everyone that asks me, it's their decision. I quit doing it at least a decade ago for the following reason. Everything has gone electronic. In order to sell or buy, you have to be in an electronic system, which means you do a private placement and you get the stock certificate. So now you've got it, you look at it, it's fine art, but you can't do anything with it until you sign the back and put it in an electronic system. So that's an extra step that you must do if you ever plan to sell it. So I've told everyone up until this point in time that you should not bother with it. Just keep it in an electronic system. Now you can sell with a mouse click. If things go to hell, I put out an alert, sell everything that's standing on the sidelines, hold your real metal, check with your Brinks account, check with Miles Franklin, and sell everything that's paper. I don't think I'd ever do that, but I don't know the future. Maybe I will. In that case, you'd want to be able to use that mouse and click off and get rid of it. If you have the cert, you'd have to do what I just said, send it in, get it in the system. Maybe, think what's sent in the mail. Who knows how bad it'll get? I don't know. But the counter argument that David gave me, which I really hadn't thought about very much, really hadn't thought about the level he did. And he said, well, if things got to what he outlines in The Great Taking, then you could, not would, but could be dealing with the company directly. So the brokers go away. So there is no intermediary. So I have Phil Baker, I'll just do a shout out to you. So I've got shares of Hecla and I've got the cert. So now I directly, interface with the company and say, hey, I've got 100 shares of Hecla. My dividend is this, and send it over to this address or whatever. Now that's very, very, very remote possibility, but you can't rule it out. But you can't really do that now. You have to go with an intermediary. It's either electronic, like an E-Trade, Scottrade, Ameritrade, Name Any Trade. All those platforms are pretty similar. Schwab, they're all pretty competitive. They pretty much give you the same features for the.
In the grand theater of global economics, the performance of assets tells a story richer than any penned by historians. Among these, the tale of silver and the dollar stands out, a narrative that stretches back centuries, revealing the core truths about wealth, value, and the nature of money itself. To comprehend the future, one must first look to the past, and in doing so, we find that silver's journey through the ages offers not just lessons, but a blueprint for financial prudence in an era of uncertainty. Silver, with its lustrous sheen, has been more than a measure of wealth. It has been a cornerstone of empires, a catalyst for exploration, and a medium for trade that transcended borders and cultures. Its value, derived from intrinsic qualities and scarcity, has lent it an enduring appeal, one that has seen it retain worth, even as empires crumbled and currencies faded into oblivion. The story of silver is one of resilience, a metal that has not just survived but thrived, adapting to new roles in industry and investment while retaining its allure as a store of wealth. Contrast this with the dollar, a symbol of economic might, yet a currency born of paper and promise. The dollar's ascendancy to the throne of global finance was not just a testament to economic prowess, but a reflection of a shift towards a system where value became a matter of decree, not substance. Yet this strength is tempered by vulnerability, the susceptibility to inflation, policy, and the very human whims of governance. The dollar's value, unlike silver's, is anchored not in scarcity or utility, but in trust, a trust that history shows can be fleeting. The performance of silver against the dollar in times of economic stress illuminates this stark difference in foundations. Where the dollar has faltered, weakened by inflation and loss of purchasing power, silver has often surged, a reflection of its role as a haven amid uncertainty. The inflationary spikes of the 1970s, the financial crisis of 2008, and the recent tumult of the COVID-19 pandemic have all seen silver rise, a testament to its enduring appeal in times when faith in paper currencies wanes. Yet, it's not just in crisis that silver's story unfolds. Over decades, the steady erosion of the dollar's buying power contrasts sharply with the appreciative trend of silver, especially when viewed against the backdrop of industrial demand and investment interest. This historical performance is not merely a record of past movements but a guide, pointing towards the wisdom of diversification, of including assets like silver that stand apart from the fiat system's vulnerabilities. As we delve deeper into this tale of two entities, the message becomes clear. Investing in silver is not just a hedge against inflation or economic downturns. It's a commitment to a form of wealth that carries the weight of history, a choice to diversify not just for profit, but for protection. In the interplay of silver and the dollar, we find a powerful reminder of the inherent value of tangible assets in a world of digital currencies and fleeting financial policies. The past, with its cycles of booms and busts, teaches us that the true measure of wealth is not just in numbers on a screen, but in assets that endure, assets like silver, whose luster reflects not just the light but the wisdom of ages.
Longer term, no. Short term, maybe. And that same update I just described, I went into the charts, and I'm not a big technical guy, man. I'm very good at it, but it's just a tool. It isn't, it isn't perfect. I think we could see gold under 2,000. I think it's more for psychological reasons that the mainstream press can say, "Oh, see, gold's under 2,000." No. I don't see it going down a lot below that level. I just think it's going to be a good year for both metals. There aren't a lot of places to go. Real estate market, commercial side looks horrible. Even the residential side doesn't look that strong. Rents are frozen in some areas, but everybody's got to have a place to live. The equity market's still overvalued. A lot of the big names are getting out. I mean, Jamie Dimon, he's cashing out some stock. Zuckerberg has cashed out a great deal of stock and built his bunker. That might tell you something. So a lot of the big players, the insiders, are ditching the stock market, yet they're still making new highs because they can manipulate the stock market with 7 stocks, basically, and make it look good. So it's time to, get real, buy real, be real. All you can do is what you can do. In other words, there's a lot of stuff out of our control, but there's a lot of stuff that we still can do. And I think one of them is to tidy up your portfolio, keep it as simple as possible. I like to teach my members, really pick out 3 of the top tier stocks. 2 of them I just outlined, 1 or 2 of the mid tiers. And if you want to speculate, here's my best guesses. And I had a really hot hand for a fairly long time. And honestly, I haven't had a very hot hand in the juniors, but no one else has either. I did have Kirkland Lake during the kind of the dull mull period. And that was a 10 bagger, but that was only 1 stock out of the list. So, I can't pat myself on the back too hard for that. But I think that is a place to look. That's the most undervalued sector right now. I mean, silver's the most undervalued commodity or money. But as far as the equity market goes, the mining sector is the most undervalued. Well, what if, David, there's a big pushback and a big recession or whatever, which is another question I got, and the answer is, yeah, they'll probably drop a little bit more. But, when you're on the floor, if you're that far off the floor, you don't have a lot to drop, and that's kind of the analogy of where we're at. Could we go lower? Yeah, but we're not going to go down 90% from here.
In a world teetering on the brink of unprecedented financial change, the stability of the dollar, a cornerstone of the global economy, faces challenges that are both multifaceted and profound. These aren't mere bumps in the economic journey, but potential catalysts for a systemic transformation that could see the traditional bastions of financial security crumble, giving rise to a new era where precious metals, notably silver, emerge as beacons of stability and trust. De-dollarization efforts. Across the globe, there's a growing movement to reduce reliance on the dollar. Nations are seeking alternatives for international trade and reserves, wary of the geopolitical leverage the dollar affords the United States. This shift, gradual but determined, undermines the dollar's supremacy, eroding its status as the world's reserve currency, and with it, its value. Unsustainable debt levels. The United States national debt is a ticking time bomb, swelling to levels that question the sustainability of current fiscal policies. This mountain of debt, compounded by unfunded liabilities, paints a grim picture of the future, one where the dollar's strength is sapped by the very policies meant to sustain it. Inflationary pressures. Persistent inflationary pressures pose a direct threat to the dollar's purchasing power. The Federal Reserve's expansive monetary policies, designed as lifelines during economic crisis, have the side effect of diluting the dollar's value, a scenario that historically paves the way for precious metals to shine. Technological and economic shifts. The advent of digital currencies and blockchain technologies offers alternatives to traditional fiat currencies, while global economic shifts reflect a world in flux. These developments signal a changing landscape where the dollar's dominance is challenged by new forms of value exchange and storage. Banking system vulnerabilities. The banking sector, backbone of the dollar's circulation, is not immune to shocks. Unrealized losses, exposure to volatile markets, and systemic risks underscore the fragility of the financial system. A significant banking crisis could unravel confidence in the dollar, propelling investors towards safer assets. Global political tensions. International conflicts and trade wars add another layer of uncertainty, with potential ramifications for the dollar's global standing. In an interconnected world, geopolitical tensions can have far-reaching impacts on currency stability and investor sentiment. The convergence of these catalysts creates a perfect storm, one that could precipitate a collapse in confidence in the dollar, compelling individuals and nations alike to reconsider the composition of their reserves and investments. In this emerging scenario, silver's appeal isn't just as a hedge against inflation or economic downturns, but as a foundational asset in a new financial paradigm. Its historical role as money, coupled with its industrial utility, positions silver uniquely among precious metals, ready to ascend in value as the world grapples with the dollar's decline. The narrative unfolding isn't one of mere speculation, but a reasoned analysis of trends and indicators that point towards a seismic shift in how value is stored and exchanged. The move towards precious metals, with silver at the forefront, is not an if but a when. As these catalysts for the dollar's collapse become more pronounced, the case for investing in silver becomes not just compelling but imperative for those looking to preserve and grow their wealth in uncertain times. As we delve deeper into each of these catalysts, remember, the move towards precious metals is more than a financial strategy. It's a return to fundamental values, to assets that have withstood the vagaries of history and emerged not just unscathed but invaluable. In the face of the dollar's vulnerabilities, silver stands not just as a safe haven but as a beacon, guiding the way towards financial resilience and security.
Well, on the unrealized losses, the key word, of course, is unrealized. So that means that if these banks had to cash out their long-dated securities, you see that's in the dark blue or black, depending on your screen. And in some cases, it looks like it's almost 50% or close to it of the bank's total holdings. So that's very, very concerning for the whole banking system because they're all interconnected. And yet the other chart shows that their net income is actually pretty stable and it doesn't show much real loss. So the way you reconcile it is this. The reason there's the unrealized losses, we'll just go over the basics here, is because interest rates have been increased. So those 30-year treasuries, those long-dated bonds, even a 10-year note, have decreased in value. So if you had to sell them now, you'd be selling them at a loss, and you can see the losses are substantial. And that has been done. And yet you get a net income, which is like a real head scratcher. The reason it is the way it is that the Federal Reserve said, okay, here's what we'll do. We will let you put up your securities, whatever they are, whatever the maturity is, and we'll loan you the face value. So you don't have to take a loss immediately. You're getting a loan. So if you had a house that was worth $100,000 and had a big market crash, and the house is now worth $70,000, and your banker was really, helpful to you, and he said, what I'll do, Elijah, is I'm going to give you the old value of 2 years ago. I'll give you the $100,000, but it's only for 1 year, and 1 year from now you've got to pay me back. So that's how you can have all this net income, is that because the banking system has been drained of liquidity as far as ready cash. Cash deposits have all moved into money market funds, which means the banks are even more insolvent, yet their net income looks good. Well, why is that? Because they get to play the spread. So you get to get all this, I'll call it free funny money, and you borrow it at X and you loan it at a point higher, and you're making that spread in your direction. So of course your income looks good temporarily. Now, when the call comes, literally it's called a call loan, and they call and say, Elijah, the year's up, where it's $100,000. These banks, will they pay it? can they pay it or whatever. The other thing that most people don't ever talk about in a fractional reserve system is how really convoluted it is on interest rates. You don't really ever delve into this part of the equation very often, or at least I haven't heard it very often. So if I only have to have a 1 to 10 ratio, so if you deposit $100, all I have to put on the account is 10 ready cash, and I get the other 90% to loan. Instead of getting 1% on the $100, I've got 1% on the 9, but it's loaned out again and again and again, so that 1% goes to my bank, and then I send it to another bank, and they get 1% on the $80, and then the next bank gets it on. So you're really getting like a 10% yield on a 1%, if that's the going rate, let's say, loan, because you've spread that money out 10 times. Of course, it's decreased slightly all the way down from, you have to hold $10, so you loan 90, so 90, you have to keep 90, have 81, and on and on. You do the arithmetic. But I don't think people think about those multiples, because the system is so leveraged or geared, as the Brits say, that it goes both directions. And that's why those bond unrealized losses are so huge. So did I explain it where you understand it? Because there's probably so few things.
In a world where the ephemeral nature of fiat currencies becomes ever more apparent, a quiet yet profound revolution is taking shape. Across continents and economies, individuals and institutions are reevaluating the essence of true value, turning their gaze towards assets that have stood the test of time. At the heart of this global shift is the rediscovery of precious metals, with silver playing a pivotal role in this renaissance of traditional wealth. Diversification and security. In an era marked by economic volatility and geopolitical uncertainties, the allure of precious metals as a means of diversifying investment portfolios and securing wealth has never been more compelling. Unlike paper currencies, whose values are susceptible to inflation, government policies, and market sentiment, precious metals offer a haven of stability and security. The industrial demand surge. Silver's dual identity as both a monetary asset and an industrial commodity adds a layer of complexity to its appeal. The metal's indispensable role in emerging technologies, from solar panels to electric vehicles, underpins a robust demand that transcends its investment appeal. As the world pivots towards sustainability and innovation, silver's industrial demand underscores its potential for substantial price appreciation. Sovereign moves towards precious metals. Nations, too, are signaling a shift. Central banks have ramped up their gold acquisitions, seeking to fortify their reserves with tangible assets. This trend, while more pronounced for gold, has positive spillover effects for silver, affirming its status in the hierarchy of monetary metals. The retail investment boom. The democratization of precious metal investments, facilitated by digital platforms and products like silver ETFs, has opened the floodgates to a broader audience. Retail investors, once sidelined by the complexities of precious metal investing, now find themselves empowered to participate in this market, bolstering demand and fostering a more inclusive investment landscape. Cultural and historical reclamation. Beyond the financial calculus lies a deeper, more visceral connection to precious metals. Cultures around the world have long revered silver for its beauty, purity, and malleability. Today's shift isn't merely economic. It's also a reclamation of historical and cultural traditions that honor the intrinsic value of precious metals. This global shift towards precious metals, particularly silver, is not an arbitrary pivot, but a reasoned response to a world in flux. As confidence in fiat currencies wavers, the immutable qualities of silver and its peers offer a form of financial solace, a bridge to a more stable and secure form of wealth. The implications of this shift are profound, heralding a future where investments are not just transactions, but connections to the enduring elements of the earth. Silver, in this context, is more than an asset. It's a symbol of a global awakening to the virtues of real, tangible value. As we witness this transition, it becomes clear that the move towards precious metals is not a retreat to the past, but a progressive embrace of universal values that have weathered centuries of economic change. As we continue to explore the dynamics of this global movement, let's keep in mind that the journey towards precious metals is both a personal and collective venture. It's about making informed choices that align with the vision of financial stability and sustainability. The rising tide of interest in silver and its precious counterparts reflects a deeper, widespread yearning for assets that not only preserve wealth, but embody the timeless virtues of durability, beauty, and intrinsic worth.
I think the risk is high. First of all, they could roll them over. I mean, one of my favorite movie clips is from the movie Rollover. It's an oldie but goodie. I'm not fond of all the actors in it, but that's a personal problem. So they could roll it over. They could make exceptions. They change the rules as they go, which they basically do. So what will happen, I don't really know. Will the banks, get enough ready cash from the spread that we just talked about and have the money to pay back? Whatever. Maybe they'll be able to sell part at a loss and still cover their bills. I mean, if you have a high net worth and you're, it's a ratio, really. It's like, well, what is your net worth? I mean, maybe you have $1 million and your asset gets cut in half, so you got $500,000, but you have only 100,000 in bills, and then you're still solvent as hell. You've got a 4 times cover ratio. So, but is that the case for most banks? The answer is no. But there could be a few maybe that have something like that. I kind of doubt it, but I don't know the real answer. I am concerned. I think it is something to be concerned with, but I also know the banking institutions they're not dummies. They can come up with all kinds of gimmicks and ways around things. And, maybe they will say, all right, if you can't pay it back, I'm just telling this off the top of my head, but I've learned to think like a criminal a long time ago because it is a criminal organization. And if you think along those lines, usually come out with a fairly good projection. So they could say, well, if you can't pay it back, what you have to do is you have to pay back 10% of it, but you're going to be charged interest on that or whatever. So you can play these games of paying interest. I mean, how many people out there in America and other places are playing that game in a way by paying the interest only on their credit card? They're not making any payment toward the principal. They borrowed whatever their limit is, 5,000, 10,000, 25,000, and the interest is 100, 200, 300, whatever it is. And that's the money they send in every month, but they're not really gaining anything, but they're not losing anything. They're just staying, running in place, so to speak. So there's lots of ways the banks could come up with ideas to circumvent a call loan and say, the example I gave you, hi, it's a year, give me the $100,000, which is really how it should work. I mean, that's basically the agreement, but they change these agreements all the time. So I'll leave it there. I think I did a fair job of explaining it. I mean, basically, these banks have got their own best interest at heart, not yours, and they'll do anything. I mean, the reason there's lots of reasons supposedly for the Federal Reserve, but the main reason is to protect the banks, not to.
In the grand tapestry of global economics, few narratives are as compelling as the delicate dance of supply and demand, especially when it comes to precious metals like silver. This dance is not just about numbers and charts. It's the pulse of the market, a living entity shaped by human need, technological advancement, and the finite nature of Earth's bounty. As we delve into the supply and demand dynamics of silver, we uncover a story of imbalance, opportunity, and the immutable laws of economics. The surge in industrial demand. At the forefront of silver's demand surge is its unparalleled industrial utility. From photovoltaic cells powering the green revolution to the latest in electronics and medical technologies, silver's properties make it indispensable. As the world embraces sustainability and innovation, the industrial appetite for silver grows, not just in volume, but in the breadth of applications, painting a bullish picture for future demand. Investment demand. Parallel to industrial consumption is the rising tide of investment demand. In times of economic uncertainty, investors gravitate towards safe havens. Silver, with its historical role as a store of value and its intrinsic physical worth, attracts both seasoned and new investors. The proliferation of silver-backed ETFs and digital trading platforms has democratized access to silver investing, further buoying demand. The constraints on supply. On the other side of the equation stands supply, a narrative of constraints and challenges. Silver mining is an endeavor marked by time, expense, and environmental considerations. As existing mines deplete and ore grades decline, the quest for new deposits becomes increasingly arduous. Moreover, silver's status as a byproduct of mining for other metals means its supply is often at the mercy of the demand for these primary metals, introducing an additional layer of complexity to silver's supply dynamics. Recycling. A silver lining. Recycling offers a partial counterbalance to the supply constraints. tapping into the vast reservoir of silver in use today. However, the recycling process is influenced by technological, economic, and logistical factors, limiting its ability to fully meet the burgeoning demand. The price implications. The interplay between robust demand and constrained supply sets the stage for potential price appreciation. As the law
See the risk in 2024 pretty minimal. I think it's I think it'd be used as kind of a last resort. I'm not sure because I think they have enough leverage to get an economy that's really grinding to a halt, and then offer kind of a UBI, universal basic income, that's based on a CBDC or the Fed Now program or Wall Street's new banking system that's all digital, and then offer an incentive that all you have to do is sign up and you'll get, this basic income. So there could be enough pain on the populace that a lot of people readily do it because they really don't have an alternative. And so I think that would be the most likely way it be implemented. But again, if there's a lot of pushback, they could, and a cyber attack is a legitimate thing. I mean, I'm not saying it will necessarily be a false flag. I mean, it genuinely could be a cyber attack. I mean, we have enemies. You've got, this really is Alex Jones, like him or not. I mean, the guy did a lot of work in the realm of alternative news, and he's coined the word InfoWars, and that's what it is. I mean, you're getting real information or false information. And the whole key to this idea of digital ID is that we got to know that you are you, and therefore you can't get hacked. And that's really false. You can be hacked almost under any conditions, but they'll never let that out of the bag. So I think the chances of a real cyber attack is less than 2% for 2024. I think the chances of 2025 go up to double, maybe 5% chance. I think the bankers will have a plan A, B, and C, implement a UBI. If that doesn't work, then we'll maybe do a small banking failure or consolidation and put all the banks into a larger bank. And when you do that, you automatically have to change your account. And when you change your account, you have to go into the new system. And now you're in the new system. So now you've got 30 or 40% of the population into the new system only because the banking system itself has consolidated into just a few entities. And so there's lots of ways they can go about it. The main idea for us is how do we regain our freedom and maintain what we have, the little bit we have remaining, and gain back what we used to have, and still have the ability to transact with each other. And of course, if you go into Revelations, it's basically a choice you have to make at some point where you either are in their system or you're not. And if you're not in their system, then you're going to be on your own with others, of course, a community or communities, and you're going to have to figure out how to survive outside of a monetary system.
In an age where the whispers of economic uncertainty grow louder, the savvy investor turns their gaze to silver, seeking not just refuge but opportunity. The question then arises, resonating with both urgency and importance: how much silver is enough? This query is not just a reflection of curiosity, but a beacon guiding us through the fog of financial planning, towards a horizon where stability meets growth. The personal portfolio context. The cornerstone of any investment strategy is diversification, a principle that holds true when considering the incorporation of silver into one's portfolio. Traditional wisdom, underscored by financial experts and historical data, suggests that precious metals can enhance portfolio stability, particularly in turbulent times. However, the allocation towards silver should be tailored to individual risk tolerance, financial objectives, and the broader economic outlook. The economic forecast lens. In navigating the silver investment landscape, one must consider the macroeconomic indicators and forecasts. In periods of pronounced inflation, geopolitical strife, or currency devaluation, the value proposition of silver intensifies. The current global economic climate, marked by fiscal expansion, debt accumulation, and the specter of inflation, paints a bullish scenario for silver, advocating for a more substantial allocation within investment portfolios. Historical insights and future projections. Historical performance data provides a beacon, illuminating the path of silver's potential future trajectory. In times past, silver has demonstrated remarkable resilience and growth, particularly in epochs of economic distress. Extrapolating from these trends, amidst burgeoning industrial demand and investment interest, one might argue for a bullish outlook on silver, suggesting a larger holding for those seeking both protection and growth. The rule of thumbs and personalization. While generic guidelines might suggest allocations ranging from 5% to 15% of one's investment portfolio in precious metals, the unique context of each investor's situation demands personalization. Factors such as investment horizon, income stability, and risk appetite play pivotal roles in determining the optimal allocation. For some, a conservative 5% allocation acts as a financial insurance policy, while for others, a more aggressive stance, perhaps even exceeding 15%, aligns with a bullish outlook on precious metals and a higher tolerance for market volatility. Strategic acquisition and holding. The journey to amassing silver should be strategic, focusing on cost-effective acquisitions and considering both physical holdings and silver-backed financial instruments. Regular contributions to silver holdings, especially in a dollar-cost averaging approach, can mitigate the impact of price volatility, ensuring a smoother path to achieving the desired allocation. In the final analysis, how much silver is enough transcends mere numbers. It's a reflection of a deeper financial philosophy that values stability, hedges against uncertainty, and embraces the potential for growth. For those navigating the tumultuous seas of the global economy, silver represents not just an asset but a lighthouse, guiding towards safer shores. As each investor charts their course, the compass of personal goals, aligned with economic foresight and historical wisdom, becomes indispensable in determining the quantity of silver that resonates with their vision of financial security and prosperity. As we conclude this exploration, remember that the journey of investing in silver, much like any venture into the realms of wealth and security, is deeply personal and continuously evolving. The quest for enough is not just about accumulating silver, but about crafting a financial legacy that stands resilient against the tides of change, ensuring peace of mind and prosperity for the future. In the grand chessboard of investment, silver occupies a position that is both venerable and volatile, offering pathways to wealth amidst the shadows of risk. As we delve into the intricacies of the risks and rewards associated with silver investing, it's imperative to wield the dual lens of skepticism and optimism, for in the equilibrium of these perspectives lies the wisdom of prudent investment. Understanding the risks. Market volatility. Silver, by its nature, exhibits a higher degree of price volatility compared to other asset classes. This volatility is not merely a marker of risk, but a testament to silver's sensitivity to economic indicators, geopolitical tensions, and industrial demand fluctuations. Investors must brace for this inherent volatility, employing strategies that mitigate exposure to abrupt market movements. Industrial demand shifts. While silver's industrial applications underpin its demand, they also introduce a layer of risk. Technological evolution or shifts in industrial usage patterns can impact silver demand, potentially affecting its price. The double-edged sword of industrial reliance necessitates a vigilant eye on technological trends and market developments. Regulatory and environmental considerations. Mining regulations, environmental policies, and geopolitical shifts in major silver-producing regions can influence silver's supply chain, introducing unpredictability into the market. Investors must remain cognizant of the global landscape, understanding how extrinsic factors could shape silver availability and pricing. Embracing the rewards. Inflation hedge. In the annals of economic history, silver, alongside gold, has served as a steadfast protector of wealth against the erosive forces of inflation. As fiat currencies waver under the weight of monetary expansion, silver stands as a bulwark, preserving purchasing power over the long haul. Industrial and technological demand. The relentless march of technology not only demands silver, but elevates its value. From renewable energy to electronics, the diverse and growing applications for silver paint a bullish picture for its future demand, hinting at potential price appreciation driven by real, tangible need. Accessibility and diversification. Silver offers a relatively lower entry point compared to gold, making it an accessible option for investors seeking to diversify their portfolios with precious metals. This accessibility, coupled with silver's potential for substantial returns, renders it an attractive option for both seasoned investors and those new to the precious metals market. In synthesizing the risks and rewards, the narrative of silver investing unfolds as a journey of calculated risk, informed strategy, and the pursuit of balance. The key to navigating this journey lies not in the avoidance of risk, but in its intelligent management. Diversification within one's portfolio, a keen understanding of market drivers, and a strategic approach to acquisition and holding can transform the volatile waves of the silver market into opportunities for growth and security. As we contemplate the risks and rewards, let us approach silver not as mere speculators, but as informed investors who recognize both the perils and promises of this lustrous metal. In the nuanced understanding of silver's potential, bolstered by a strategy that respects its volatility, lies the path to harnessing its value as a cornerstone of a resilient and diversified investment portfolio. In conclusion, the dialogue on the risks and rewards of silver investing is not a deterrent but a guide, a map that navigates through uncertainty towards informed decision-making. For those who tread with caution, wisdom, and an eye towards the future, silver offers not just a hedge or a haven, but a horizon brimming with potential. In the intricate ballet of global economics, every step, leap, and turn has led us to the precipice of a monumental shift, a shift where the traditional bastions of financial security are questioned and new champions of value emerge. Standing at this crossroads, the apex of our journey, we unveil a compelling narrative that positions silver not merely as a metal, but as a cornerstone of financial prudence in an era teetering on the brink of a dollar collapse. The unraveling of fiat's fabric. The story begins with the dollar, a currency once unassailable, now fraying under the pressures of immense debt, unchecked monetary expansion, and the specter of inflation. These are not mere tremors but tectonic shifts signaling the vulnerability of fiat currencies, heralding an era where the search for true value becomes paramount. Silver's resurgence as a financial beacon. Into this breach steps silver, a metal whose luster is matched only by its enduring value. Historically revered, industrially indispensable, and financially formidable, silver emerges as a beacon for those navigating the uncertain waters of currency devaluation and economic upheaval. Its dual role as a hedge against inflation and a critical component in burgeoning industries positions silver uniquely at the heart of the transition towards tangible assets. The convergence of demand, the industrial demand for silver, driven by its pivotal role in renewable energy, electronics, and medical technologies, converges with a surge in investment demand. This confluence, set against a backdrop of constrained supply, sketches a future where silver's value is propelled to unprecedented heights, suggesting scenarios where prices could soar, reshaping the landscape of investment and wealth preservation. Strategic implications for investors. For investors, the apex of this narrative is not a point of conclusion, but a beacon for action. The potential for silver to ascend in value amidst economic shifts presents not just a safeguard against volatility, but an opportunity for substantial growth. The strategic accumulation of silver, whether through physical holdings or silver-backed financial instruments, becomes a calculated move towards securing a stable and prosperous financial future. A call to action and vision for the future. As we stand at this juncture, the call to action is clear. For those looking to fortify their financial defenses and seize opportunities on the horizon, silver represents a strategic asset of unparalleled potential. Investing in silver is more than a hedge. It's a statement of vision, a commitment to a future where value is measured not by the promises of governments, but by the timeless worth of tangible assets. In conclusion, the narrative that unfolds at the apex is one of transformation and foresight. It challenges us to reimagine our financial foundations, urging a pivot towards assets that promise not just stability but growth. As the world makes a significant move towards precious metals, skyrocketing the price of silver up to $2,800, the wisdom of early and strategic investment in silver becomes not just advantageous but essential. Let this apex be a call to arms, a reminder to diversify with deliberation, to invest with insight, and to view the future not with trepidation, but with the confidence of those prepared to navigate the ships of economies and the cycles of markets. As we chart our courses through the tumultuous seas of finance, let silver be our compass, guiding us towards a horizon bright with promise and prosperity. And so, as we wrap up this exploration, remember, the journey through the realms of finance and investment is ever evolving. Keep informed, stay strategic, and let your investments reflect not just your goals, but your vision for the future. And remember, this is not financial or investment advice, but a lens through which to view the possibilities that lie ahead. Thank you for joining this journey. Don't forget to subscribe for more insights into making informed financial decisions in these uncertain times.